Alrighty, folks, we'll come on back here to the Diagnostic Trading Hour. My name is Darrell Martin here on TFNN.com. Don't forget you can listen to us on your mobile phone at TFNN.mobi, live inside the eSignal platform. And, of course, on your computer, you can see the charts that traders are using right there at Tiger TV. And let me check right here. We'll get that chart posted right up to you, okay? So get that coming on over, and you ought to be seeing it in a second now. I think I just maximized over the wrong screen. And that ought to solve that for you. Okay, there we go. Looking at where some of the markets are at right now. We got oil is down $1.91. Basically, if you were trading today, you should have made money as long as you weren't trying to fight every trend along the way. Because it was pretty spelled out on this massive, nice drop this morning, and gave some nice, clean turnarounds in the entire process going with it. And, you know, hopefully you've taken some of those profits and you're going to go enjoy yourself for the rest of the day after that solid deviation move we got across the board. We'll take a look at some of those here in just a moment. Again, oil down $1.94 now as it keeps coming on down. We got dollar index is currently up $1.14, so 1.14, 1.135 right now. We got S&P down 26 points. This is the way to come back from a holiday, no doubt. Looking on over at gold. Gold is currently down 17 points. We got copper. Copper is down as well, along with silver gets some good moves. We got natural gas down 0.094. Looking on over at, let's see, we got the Russell. Russell's down 16 points. Dow's down 241 points on the day. Going over to bonds. Bonds got some big moves, up 2.17 right now. That's massive. We got corn is down 5 points. Soybeans, being the quiet market out of the bonds, down 1.5. Our FX pairs, we got some quiet ones. So we got some loud ones. We got Aussie yen right now is up 8 pips. We got the Aussie dollars down 76. The euro pound down 21. Euro yen up 38. Going over to euro dollar, it is currently down 84 with the pound yen up 126 pips. Pound dollar down 78. Dollar CAD currently up 116. The dollar franc up 45. And U.S. yen up 127 pips on the day. All right, well, that catches you up on just the current market wrap. And let's go ahead and catch up on some of the just top news for the day and go through that with you. Some of the top headlines that I've seen roll across, and top doesn't mean the most important, but just, you know, some of the things that, you know, are worth mentioning. European stocks obviously joining the sell-off that's been happening. The euro dollar dropping down to fresh 1 month lows. Let me go ahead and pull up just let me see if I can grab a basic 10-minute chart for you. And if I can, then we'll open that one up and walk in and through some of these charts with you. We got gold down 2. That's right, 2 deviations. Moving on down right now, it's at 1187 from 1188.8. So it's been flying on down. But we can go on down, and of course we got, you know, just looking over at, we'll just say the S&P. S&P, like I said, moving down solid and tumbling after Greek talking all their debts and everything else, down 1.5, down 2098.5, and bouncing right now, by the way, to the tick right off of -1.5 deviations. Just sort of sitting there trying to decide if it's time to keep going or not. And things starting to come down after the first real retracement. A little bit of a pop right there. One last, oh, man, I just woke up and I want to sell the market group came in. And final take profit coming in. And that's why you're seeing a lot of volume right there on those 10-minute bars. And, you know, on that last 10-minute bar there that just closed out, 1310. Now, it's not like it's not a magnet level, but it's a level, you know, this time of the day worth noting that a lot of people are taking profit, a lot of last-minute sellers trying to come in and not working out as well for them. Let's see here. Going in and pulling this up. Make sure that's coming through for you. All right, so we'll go ahead and look on over at the DAX, and let's pull it on up, FDAX. and load that chart. We'll do a little analysis on it. We'll take a little gander over across the different pairs here. DAX flying on down. Actually started a little earlier for us, and but just kept coming down to 2 deviation move, and it did its first pullback right there at 1, as you can see, and then it oscillated, bounced for a good hour or so, solid right there between 1.5 and 2. Broke through it with some high volume. That last bit of breakout traders, take profit traders, everything else going on, pot back up, and now just sort of, again, doing that same little oscillation dance right between that area. So the move was great. It was nice, but the move is probably pretty done right now. Going on over, looking at the FTSE. Let me see if we got, we'll go over here. Look at the life of FTSE here, and just look at some of the European stocks and you know, British there. And then so anyways, FTSE on down 2 deviations solid, and I mean, you cannot ask for a smoother trend, and often ignored, by the way, market by many traders. But you know, it can have some, just when it does trend, okay, when the market's trending, it's a really smooth trend. So you get those nice trending days. You can notice you don't really get a whole lot of that oscillation happening. Just really smooth trends compared to some of the other ones we looked at. You can notice how just easy and simple that is. And that takes in 0.5, so a little bit different than what a lot of traders are used to. Let's see here. And what else do we got? We got the US PMI moving pretty big. Let's go over. Let's pull up our euro dollar chart. And these are the lowest levels since January. So we're getting some surprising moves coming on out of the news. And let's see, what kind of move does that give us from 8 a.m.? Okay, a much bigger move than normal. 8 a.m. over here to 10. Right there. What did we get? We got a 20 pip move on our FX move right there. We expected it to be around 30 pips from the news plan I went over with you last week. So hopefully you were able to follow along with that as I walked through each one of the news releases and talked about what news reports were coming out and what expectations were there. We still got a big move. I mean, it was more than I would say I expected, probably more than most of you expected if you're trading that trade. But it still did a pullback on it, and in that sense, really didn't surprise us that much. It moved down 47 pips. So if you're going in and you're following along with the news plan where I'm like, hey, we're going to do a 30 pip iron condor on this trade, where when I say iron condor, I mean really simple. Buy the spread below the market, sell the spread above the market. Okay? So not that hard, not that fancy. And just make sure that the maximum profit, when combined together, is a minimum of the expected move. And so if we go in, and I was working on it with a trader on this last night, and he was asking a few questions on iron condors, and let me pull up this trade. We had the core durable good orders coming in right here. And the core durable good orders are like, hey, enter at 8, look at 10 o'clock, and look for a $30 minimum profit. Well, if we had $30 profit, that means it could move up 60 and down 60. Before we were at basically a 1-to-1 max loss to max reward scenario with a stop, okay? And so we moved down to 47. Hey, we're still good. Pulls on back up. We don't pull in a lot, but we do pull in about 10 or 11 ticks on the trade. Now, we had another trade that came in right after that. And just like I said, a lot of reports coming out this morning. And on that trade, we were looking for another 30, but entering at 9 o'clock. And so let's see how that one worked out. 9 a.m. We'll go over here right there. And we said choose a 11 a.m. expiration. On that one, I had only 7 pips of movement. So we locked in 23. So 23 plus 8, we got about 30 pips out of the day on those 2 trades combined. And, even with the massive movements that are happening, still we're able to capture the premium on it. And it amazes me how many traders go in on these in-the-money binaries. I'm not saying I don't trade them now and then, but, I mean, come on, this is so much easier. It's so much less risk. It looks like more risk, But people don't realize they're trading these binaries. They're going for like $10, $15. It's like, just collect $15 in premium. If it goes against you, how much money are you going to be risking whenever you go in to put on that trade and collect $15 on a binary? I mean, at least 35, 40, 80, 85, if you let the thing all the way to zero, if it does in the last second. These are $1 a tick. And you're just buying the market, like say 15 pips below where the market is. So if the market stays flat or goes up, you collect all 15 pips. If it goes down up to 15 pips, you're still break even at the end of the trade. And really is a much better way to trade. And I tell Philip, one thing I do mention is binaries are where the buzz are, spreads are where the long-term game plan is. So, and traders slowly but surely are catching on. I talked about spreads literally when I did my show probably for the first year, almost exclusively. And then I started slowly bringing in binaries and teaching binaries. But, they were the second instrument I went to. I learned how to master spreads first. And they're easier, and they work a lot better, and they're a lot less frustrating. And I have my moments where I love binaries, and I have my moments where I hate them. Spreads are just sort of spreads. They're just sort of there. They're very unemotional, and there's plenty of profit to be made in them. And so, let's look over real quick. Let's go on over to NASDAQ. And I want to highlight this because this has now become my new favorite Nadex spread. And it ticks now in 0.1 on Nadex. Well, the NASDAQ itself ticks in quarters. Well, on NASDAQ, a quarter is worth $5. There's 4 quarters in a dollar. Okay? On Nadex, it ticks in 0.1 or dimes. There's 10 dimes in a dollar. All right. So 10 dimes in a dollar. So 10 ticks versus 4 quarters in a dollar on NASDAQ futures. NASDAQ futures, every tick is worth $5. There's 4 quarters in a dollar. So if every tick is a quarter and there's 4 quarters in a dollar, then every 1-point move, 1.0 move is going to be worth $20 or $5 times 4 ticks in a point. Okay. US Tech 100 ticks in 0.1. 10 ticks in a dollar, $1 tick, every point is worth $10. So we'll talk more about that when we get back. Stay right there. Alrighty, folks, well, I'm back here to the Diagnostic Trading Hour, picking up where we left off on NASDAQ. We got the NASDAQ futures, again, tick in quarters. So they go 0.25, 0.5, 0.75. Oh, okay. Every quarter is worth $5. 4 quarters in a dollar, 4 ticks in a dollar, 4 ticks worth $5. 4 times 5 is $20. Nadex ticks in 0.1 on its derivative spreads. Spreads being the key, not binaries, but spreads. Ticking in 0.1. Okay? 0.1 is a dime. There's 10 dimes in a dollar. Every tick on every Nadex spread ticks in an increment of a 1, wherever the decimal is, whatever, but the last single digit is always a 1, okay? And it's always worth $1. Makes it a lot easier, okay? Then I have to memorize 20 different tick values. Anyways, but you got 0.1, you got 10 dimes in a dollar. Every tick is worth $1, so that's $10 a point. Well, if the NASDAQ futures are worth $20 a point, and the spreads are worth $10 a point, then how many spreads does it take to equal a future? 2. Okay? So hopefully you got that down. Hopefully you're following along. Why would you want to trade them? Okay, well, there are a few reasons. Let's take a look and just see how they work. Okay? Let's walk through them. I want you to really get this. My humble opinion, 99% of traders should be trading spreads, not, I repeat, not binaries. Not until they got them down. And I know binaries are the buzz, and I know that there's a billion websites and groups saying that binaries are where it's at. And I got that, and I like binaries. Okay, so I'm not anti-binary. But they are much harder to trade. And I've said this. You can listen to shows that I've done a year ago, 2 years ago, and you'll hear me say the same comment. Spreads are a little bit harder to understand. Not a lot harder. A little bit harder to understand. And a lot harder. Okay, sorry. A little harder to understand and a lot easier to trade. Binaries. Okay, binaries are a lot easier to understand and a lot harder to trade. People say, well, I'm risking more money if I trade the spreads. Not really, okay? When you're risking $85 to make 15 on a tenth of a tick settlement value, you're risking a lot, okay? Just because I have to put up more money doesn't mean I'm risking more. So let's go. Let's see, what do I mean by all this, okay? Let's go in. Let's find what spreads. Let's see if we can find any spreads. Everything's moved so massive. Okay, we're going to define some with really low tick values. It's going to be harder to find. This is probably like the worst day to do it because they've blown through the spreads. They've been capped out on profit. Makes me wonder about this like bounce one over here. Let's look at that for fun. We'll pull it up. Now, understand these are Nadex ticks where it says proximity. They are not the underlying ticks. Let's see here. Let me go ahead. All right. So looking at these ticks right here, what is the easiest way? I mean, even the maximum big old spread, it's outside of that, which is amazing. But let's go over here. Let's just look at the little ones just for a second to get it down, okay? Somebody sees this and they're like, well, I'm risking so much. Well, if you're going for like 5 or 10 ticks, or if you're going like 10 ticks a movement or 1 point a movement, you make $10. Look at what the bid offer spreads are. And that's with the volatility being through the roof today. We're talking 1 to 2 ticks. This is the left side is the sell price, the right side is the buy price, okay? And look at that. All right? 0.9, 0.0, meaning you have a bid offer of 0.1 or 0.2. Well, what's your minimum bid offer spread on a NASDAQ future? Okay? If you traded them at all ever, you know it's a quarter. Okay? So again, it's a quarter. Very simple, very easy, but 1/4, which means it's 0.25. You're getting tighter bid offer spreads on Nadex. All right, we'll keep talking about it when we get back after this. All right, here we go. Okay, so we're on the NASDAQ spreads again, and going through this and how this works and everything else, just showing you how tight the bid offers are so you can get that down. And the main reason I'm wanting you to understand how these work is it's pretty simple, the concept here. They're only a tick wide versus 2 ticks wide over on NASDAQ futures. Okay? And you're paying $1.80 round turn, and that's if you're just doing one. Okay? It caps out at $9 per side if you're doing more than that. And so let's go look at it. Let's go over here. Let's look at Ninja Trader Brokerage, which is I'm really excited about everything they're doing. I think they're making things a lot better out there. And they got really low commissions. But let's hop over to their main site. That's what I'm trying to get onto. And I want to look at the round turn cost, okay? So let's go into account fees and not those kind of fees. There we go. Okay, round turn, all in. Give me your money cost. All in rate, let's see, $3.40 up to $4.25. Okay. Now let's go down. It's basically the same. So say you're leasing Ninja or whatever, and you're probably paying more than that, by the way, if you're over on, let's just say pretty much any other platform. $380, $424, $340. So, for $1.80, if you have to do 2 contracts, that'd be $360. Okay. So right in between the lease and lifetime rate of the future, but 20 cents difference there. But again, you're saving money also, remember, on that bid offer spread, because it's 0.1 or 0.2. If it's 0.1, then you're saving a couple bucks. Okay. If it's 0.2, then you're saving basically $1. All right. So versus the normal, quarter there. So you're saving $1. So between the, fees and the bid offer spread combination cost, you could say, you actually come out ahead trading the Nadex spreads. They cost less money to trade. Okay, now, what about complexity, bro? Oh, they're so complex. Da, da, da. Find the end-of-day spread normally. Okay, we're way outside of the normal today, right? But find an end-of-day spread and find the one that's in the middle. Now, you can choose these smaller ones, like right now, with the market being really quiet. It's moved so much already. You could go in and you could decide to go ahead and, trade like some of these middle spreads if you wanted to make some money and all that. And like say you're shorting this contract right here to go short on NASDAQ. You think it's going to go down a few ticks. Bid offer spreads are really tight. Wouldn't take a whole lot for it to hop on down. And it's really simple. Yeah, you just click open up and it opens up a ticket for you. Okay. I'm just using the scanner here because it's a lot easier to trade off of. And, you could buy or sell the same spread. It's right there in the middle. As you can see, we have the risk and reward laid out for you. So if we go over here and we place an order to, we'll just say sell this contract. May have missed it because it was moving so fast already. Talking too much instead of trading. Anyway, so we'll go back over here. Maybe it'll oscillate for us a little bit. We'll get our fill. There we go. Okay, so now we're filled on the trade. And let's go ahead. Let's do 2 contracts. All right. Let's do 2 of them. So we'll go down here. We'll do the same one. And now this is just a 3 o'clock one. So we don't have a whole lot of time on here. We had an hour and a half. And that's enough, But, and we, sell this contract. And then let's watch what happens. Okay. So I got 2 trades on, 2 contracts on. Now, we have a little more premium than normal, okay? So right here, we got a little bit more premium than we're used to having simply because, why? Because, well, there's, have you looked at the VIX? So let's pull that up. Let's show that real quick. And that's just going to push prices a little bit more towards the center, okay? And yeah, so it's flowing up to like 14.47. So 2 points is a insanely massive move. If we go in and we're looking at movement, we've got just a massive, nice spike. I mean, usually don't get this kind of IV late in the month. And so we're basically just oscillating right now, making a couple bucks flat, making a couple bucks flat. Nothing real exciting, okay? But if you're a new trader and you want to go in and you want to, risk 20 bucks or make 20 bucks or whatever, this is the place to do it. It's very, very simple. It's very easy. It's low risk. It ticks fast. You get a couple points. You're solid. You're good to go. And I mean, look at how fast we covered our bid offer spread already. All that. Now we are pushing down here on a low. I mean, this isn't necessarily one of those like just massive trades. I'd be all over. I honestly should be in the trade and probably about out right now. The way I trade, I'd be getting in right below that and just grabbing a couple ticks. But we got a potential runner if it decides to keep going. I'd use a little more caution on this just based on where we are on the day, being down here to 1.5 deviation, et cetera, et cetera. But I can go in and I can limit my risk because, hey, there's a good chance this thing's going to pop around, turn around, go back up, and just oscillate into the end of the day. And I don't have to risk massive amounts of money. I don't have to risk $85 or whatever. Okay? I go in, let's say I want to risk, 20 bucks on the trade. Then I can go in and I can place an order to exit the trade should it, get above my initial area, or I can put an order to take profit. So let's say I want to take profit when the market came down, it hit 4461.5 on the underlying. Okay. Well, since they pretty much are ticking about the same, I'm just going here in 4461.5. So I'm going to put an order to buy it back right there. Okay, so now I have a working take profit order. Boom. That shows up right there in the scanner for me. If I go in, let's calculate what would I make if it did hit that price. Well, I sold it at 44. Sold it at 44.64.6. If I bought it back at 44.61.5, I'd make 3.1. That's 3.1. Remember, it ticks in dimes, so divided by 0.1, that's 31 ticks. $31 times 2. That's $62 on a trade. Okay. Now, when some people look at this trade, they sort of freak out because maybe they see the high risk. It's only $50. It's like an at-the-money binary contract. You can do ones that work the complete opposite. Now, people look at this, they're like, "Oh man, I'm getting nailed on this. It's going against me. I want to get out." Da 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 da. Whatever. You can get out of the trade. You don't have to hold the thing all the way and risk $100 on the contract. Okay, so you can go in. You can use, I have my stop plugin, and you can use that to make it even easier to allow you to basically manage your risk, so you can trade it more like you're trading futures. So hopefully that'll make it a lot easier for you. But you can go in and you just open the thing up, and like I said, it'll allow you to, from that point, set a stop if it goes up and hits whatever your stop happens to be on the market. Okay, and it's got like worse limits and offsets and all that fun stuff. I'm trying to pull up the new one because we've been working on it. There it is, and there we go. Here's the new version I got coming up that we've been working on, and it'll allow us to go and go, okay, well, if it hits X price, get us out. So, it's ticking against us a little bit. Let's just say I use 44, whatever, a 14 tick stop. So we'll say $28 from our entry. And where do we get it? We got in at 44.64.6. Let's add 1.4 to that. So 5.66. So I can literally go in here. Say if it gets to 66, then get me out of the trade, place the order, and then activate the stop trigger. Pretty simple. And now it'll work for me, and instead of me having to sit there and hold on to the button for the next hour and a half. I mean, all I need is a slight tick move down, and I'll make my $30 or whatever on the trade. Again, let's go back. Let's do the math on that, because if you can start getting the math on these, and a big key being choosing those middle spreads, okay? So people freak out because they're like, "Oh, I want the really low risk," and I'm like, "Yeah, but now you have to deal with optionality and the option moving slow and all that." So again, 44.64.6 minus 44.61.5, $31, okay? Per. So I will make $62. $62 trading these two spreads. That's not bad. I mean, buying a $50 binary to make 30, and I'm not risking $50. I'm not going to let that thing go 5 points against me before I get out of the trade. Okay? Let's say the market expires. I sold it at 44.64.6. Let's say it expires at 44.64.7. You know what I lose on the trade? $2. That's it. 2 simple flat dollars is what I lose on the trade. So really, really simple, really easy, and moves fast, moves with the market for me. And now we just got to, have the market, move down and hit our price. So it just needs to move a couple more points down, and we will be out of the trade. And it's different when you buy and you sell. That's why I'm like, they seem hard to understand, but they're actually easier. Like, it makes sense where the price comes from. It follows the market. Other contracts that are like on the top of the list there, by the way, that's equal to one future contract. And you know how much we put up to trade it? We put up $100. You know how much we could lose if the thing just blew against us completely? $100. Okay. Gold is also an awesome one. Unfortunately, it is closed. It closes at 130, but it is usually about a tick wide. Some of the other markets are actually not as bad as they might look. Like if we look over here at the S&P, And on the S&P, we go and we look at that trade and look at this right here. It's about 0.4, 0.4, 0.5. That's like 2 ticks instead of 1 tick. So it looks massive, but remember, it ticks in 0.1 on Nadex. So, an extra tick to have defined risk. If you've been in a flash crash, you know what I'm talking about. That is worth it. Let's look at the Dow, look at small caps. Some of these may have wider bid-offer spreads. They may not be contracts that you like. And I'm definitely pushing them to tighten those things up. This is 4 ticks wide. Yeah, it's a little wider than I'd prefer over on the Dow, but, not too horrible. Go over here to small cap. It's about 0.4. So, instead of like 1 tick or 2 ticks there, you're getting 4 ticks. So a little bit wider on some of the spreads, but like I said, NASDAQ and gold, they're either on par or cheaper. Not really cheaper. Gold would basically get at basically 0.1 or 0.2, just like, gold futures, which will basically be 0.1 in most cases. Every once in a while it'll be wider. But, the other ones, you're looking at about 3 or 4 ticks wide. It's not some like ridiculous number. And people look at it and, they're like, well, I don't know. That just seems really, really expensive. I'm not sure if that's a good idea. Like that, those spreads are so big, and they're comparing the underlying market to the futures market. All right. So that really is the big case here. They're comparing the underlying market to the futures market versus comparing it over here to an option market. And you can compare these puppies side by side with CME and they beat CME most of the time hands down on bid offer spread. So they have very, very reasonable bid offer spread happening on these contracts. And if we go in and we look at them, let's see here. We're looking at a Aussie right now, 3 ticks wide. That's not a horrible bid offer. Euro dollar, about 3 ticks. I know you can get like 1 tick wide and all that stuff, but you also have S&B jacking up the world, right, and closing down binary brokers, and FXEM having to be bailed out, and companies losing hundreds of millions of dollars on one Swiss announcement, one Fed announcement. You don't have that issue. Nadex is not subject to that issue because everything has max risk, and max risk is put up at all times. But you still get massive leverage, such as controlling a mini lot for $25. Come on, literally, you're controlling a mini lot for $25. What does that mean? Is that a good deal? Is that a bad deal? And I try to get people on these spreads. I try to help them understand, it's such a better, safer, easier way to trade. But if we go over here and we look at this, 1.0, if I get my hand on the right button, 1.0876. Okay, you're doing 10,000 units of currency on a mini lot. So 10,000, okay? And then you're getting 50 to 1 leverage. $217 is just your margin, plus your floating P&L that you're going to put up if you want to trade that on spot Forex. Come on. $25, $217. And $25 max risk. $217 isn't even a max risk. It's a no-brainer. Stay there. We'll be back right after this break. All right. Welcome on back to the Diagnostic Trading Hour. And so anyway, I'm just trying to go through and sort of help you see, how these spreads work, and, how you can take advantage of them. And when they go against you, it doesn't hurt near as bad as like it does on a binary, okay? And there's just a lot of ways to trade them. Now, you can go in, you can do neutral trades, you can do breakout trades, you can do directional trades. And depending upon what trade you're going to do, it's called an option for a reason. You have options, you have choices. So we'll determine what choice you make when you're making that trade, okay? So you do need to learn a little bit, but if you want to keep it simple, okay? Now, I talk about the iron condors all the time, but probably we should do a show just wrapping up iron condors for you again and making them really simple for you. And maybe we'll do that on Thursday. Let's do an iron condor step-by-step review, okay? But if you want to keep it simple for directional trading, it's really easy. You're just going to go in and you're going to trade the spread that mirrors the market. It's going to be within like 5 ticks proximity of the market, okay? And you're going to want at least 0.7. So you're going to go up here, you're going to change this to 0.7, you're going to change this to a -5 and a +5, okay? And That's going to give you, one contract. Usually, it'll give you a few contracts. Today being an exceptional day because of how far the market's moved. Normally, you're going to want a end of day expiration so you can take advantage of that movement. Okay. Now, right now, we're able to sell a spread above the market, which is rare. There's so much premium in there, like right at the money is actually above the market. So we're actually, in a sense, collecting premium on the market right now. Because we sold at 44.64.6 and the market was lower than 44.64.6. We sold above the market. So the market literally just stayed flat. We would end up making money. And let me show you what I mean. Okay. Look right over here, 44.63.75, 44.64. And they have the indicative at 64.8 right now. So we actually, not the indicative, but the current price. So we actually have some premium in our favor, which means we didn't pay any premium. We're collecting it. It's always good to understand what that proximity means and be on the right side of the proximity, because you can actually be the collector versus the payer of the premium. And I like to collect premium on my trades. I'm sure hopefully all of you like to collect premium on your trades. Let me show you. Normally what we're going to see is you're going to see negative premium, okay, on a sell. So let me just find a normal market that hasn't just exploded today. Let's go with corn, okay? Notice how most of them, except for the one that's just like ridiculously out of the money with no profit, notice how you have a positive number on proximity. And over here you have a negative number. One of them has a positive number, okay? Normally they all the cells have a negative proximity, which means you're selling, the market's a little bit, it's actually you're selling 9 ticks lower than where the market is. You're buying 9 ticks above where the market is. Right now, there's so much premium built in, it's actually throwing things off a little bit. And check it out, all of our spreads, okay, have positive numbers. Now, most of these you can't make anything on. 1.2, 0, 1.2, that's all useless. Okay? But these 3 spreads right here have a positive premium. And when you start getting premium, spreads start getting exciting because you're actually able to sell higher than the market, buy lower than the market. And if you understand that concept, if you chew on that for the next day, come back on Thursday. We'll talk about how to make money with that concept even more. Y'all have a great day, and I will talk to you next time on the Diagnostic Trading Hour.